Hey everyone, welcome back to the channel. Today I'm going to share with you the 6 investing habits that have completely transformed my financial life. Trust me, these habits are game changers and I can't wait to review them with you. But before we dive into the juice details, let me quickly introduce myself. I am Isaac Jonas and I've been on the roller coaster of investing since 2020 when I started to actively participate in the US and Canadian stock exchanges and to an extent to the Zimbabwean stock exchange. But I am academically trained as an economist. I completed my bachelor's degree in economics at the University of Zimbabwe before I completed other 2 master's degrees at the University of British Columbia, including a master of food in resource economics. Now, through these years, I've learned that it is very important for me to employ a combination of the theory that I learned in class, but also most importantly, the life experiences, and also to read quite actively and keep up to date with what is happening around the world as I invest in the capital market. So it's not just about making money, it's about setting yourself up for a secure future. Now let's address the elephant in the room. The common challenges most people face is that it stems from whether lack of knowledge, fear of risk, sometimes even being inconsistent with saving, and these adults can hold people back in terms of reaching their financial goals. Now, fear not, because I've been there and I've learned of how to overcome these obstacles with the right strategies. So let's dive right into the meat of it. The 6 common habits that have transformed my life profoundly. These are not just about making money, but they are about building a solid foundation in your financial life. So now let's talk about it. The first thing that I've also spoken about in my channel is that in my case, I like to have an emergency fund. That is the living expenses that my family, I live in Canada, for example. So these include the monthly expenses, and I like to have at least the living expenses that are worth more than a year. In other words, I just put them in a high savings account. Now they are savings account or checkings account that yield 6%, which is above inflation, so much that if I lose a job, or if my income stream drops, or one family member loses a job, or there is something that affects our financial situation, then I don't have to liquidate our positions in the stock market. Now, because sometimes the market will be down 10% or whatever percentage, but the worst thing would be to liquidate at that level. But the key thing now is it gives me the financial fortitude to say, if I have 2 or 1 year worth of living expenses, and if there are wonderful opportunities, then I can deploy the capital without worrying. So there's peace of mind there. Secondly, I like to educate myself. In other words, I read books about finance, and also, even though my academic background, I understood a bit of theory from class, but over the years I have seen that there are other aspects that involve, if I'm intending to invest in a business. Sometimes, let's say I want to invest in Apple stock, I sometimes want to go to the business, to the store, and just see, the experience of doing that. Because when I'm investing in a business. I'm not just buying a piece of paper. In addition to that, I want to understand their finances, their management. I want to read the letter, from, what the management say. And there's a form that is called the Form 10K, and it's usually filed by every publicly listed business. If you go on their investor relations or the Security Exchange Commission, which regulates that in the US where I mostly invest, you will see that they will summarize the most important thing from the competition, from how their future outlook. So it's more like the story of the business, and sometimes it may be 180 pages or more. But what I do is I just focus on the key things. Like I just say Control F, and then say I type a word to say competition. What are they talking about? Competition. Management. What are they talking about? Management. What are they talking about? Their plans. What are they talking about? The risks. So if I type out the word risk, it highlights all those things, and that's what I do, and it saves me time. But now over time, because I follow most of these stocks that I want to invest in, I get an idea of what's really going on, and I follow their earnings call. And that is important, because now investing my money is not just about throwing the money and forgetting. I want to know and to see if that money is bringing in a good return. Now, the third important thing is now to start investing. So once I have an emergency fund for a year or two, the other important thing, I've educated myself. Now I want to start investing. That is, if I don't have debt, then I just start to invest for the long term. And now I only invest most of my money, and for the family fund that I manage, it's mostly in index funds, and it has been proven that index funds, they beat most professional investors at least 94% of the time over the years in the US. So I have a combination of index funds, but also very individual companies that I understand, and I only invest not more than 10% in one business. So, and also some other securities like cash, which I will explain in a second. Now I then move on to the other important thing, number 4, constantly managing emotions and the urge to overtrade. The most important thing that I've seen in my investment journey is that sometimes the market can drop in ways that are unexpected, and a lot of times people then panic and freak out. So that's when, for me, I am smiling and saying this is a wonderful opportunity. Let's say if a stock that I've been analyzing, for example Salesforce, it missed it actually dropped, even though their earnings were not really bad, but they reduced their guidance. It dropped by 17%. The same thing happened to Meta Platforms when they in their earnings call, they mentioned that they would be investing in the artificial intelligence and investing a lot of money in terms of their capital expenditure, and some investors, they freaked out. And what happens is people overreact, and then that means it sometimes goes even below the valuation of the business. So that's when I'm so excited. So that's a key thing, to control emotions. It's very simple, right? And most of the time I'm not doing much other than researching, reading books, and following what is happening in the businesses that I want to invest in the future, at least those that are publicly listed. Now, the other important thing is to play a long-term game. I am investing for the long term. So what that means, the stock might go up and down in the short term, but if it goes down and if the story for that business has not fundamentally changed, it's an opportunity for me to add some more shares, right? At least even including the exchange traded funds that track the S&P 500 that I like to invest in. I also invest in other securities that are not related to, correlated positively with the S&P 500. For example, that's another point in this case. The stock market does not always go up all the time. So even though I am mostly bullish over the long term, in other words, I am expecting that the market, at least from the history, the S&P 500 has been going up over years. But there are moments when it drops. So when moments like that happen, it's an opportunity to add some more shares, but also more importantly, I have some positions. In short, I will say short positions. Those are the positions, let's say 5% of the portfolio is in the volatility index ETFs. In other words, ETFs that track the volatility index. In other words, if the market is measured by the S&P 500 drops, then they can potentially spike up. And also even gold, it has been shown to go up when the stock market, particularly in the US, drops, because people then go there as a safe haven. So what that means is, if it goes up, then my portfolio, using a combination of also fixed income, that is, for example, just securities that can say guarantee you the principal plus some interest, then the portfolio does not drop very significantly in that case, because even if it drops for the equities, for the index funds and the ETF, for the um, individual stocks. Then if I have fixed income and even cash, what it means is that that money can still remain there, and I can even deploy it when the market is down. Only in businesses, that I understand. I want to emphasize that because a lot of people, they get so excited when the stock market drops and they invest in crappy, in companies that are really, really losing money. Chances are high that they might actually not even see the light of the day over time. So that is very, very important. Now, the last thing that I am going to talk about now is, understanding the tax system. This is very, very important. Every year, my family and I, we talk to our accountant to just understand, to say, what's the best way that you think we can actually, of course, we are law-abiding citizens, and in Canada, we are fortunate that, they have a combination of other accounts, like registered accounts, tax-free savings account, and other set of accounts that I've talked about on this channel. And these are ways that we can, shelter, our portfolio, in the sense that if it's tax-free, it means if I make 1 million, that account is tax-free. If it's RRSP, registered retirement savings account, what it means is they are basically encouraging people to invest for the long term, right? And then they can possibly withdraw their money when they turn 71 years. But the thing is, over the period of time that they are consistently investing, now it's tax-free, so the money can compound over time. So understanding that is very, very important. I'm confident in most parts of the world, including the US and other countries, they have those kind of opportunities. But a lot of people, they don't invest the time to just understand the tax system. It can save a lot of time. Now, in conclusion, I'm just going to say that these habits are very, interesting, in the sense that they are very simple on paper, but sometimes the key thing is the behavioral aspect, to understand, repeat, and also modify as time goes on. A lot of people, they contemplate even saving or even starting to invest. So it is very, very important that you consider these things. So now, this is the end of the video, but I would like to encourage you to check out some other videos on this channel and share with me what you think about these habits that I've developed over the years. I'm looking forward to reading your comments below. Thank you and have a wonderful day.